The chemical companies continues. Not a surprise, really. UPL's numbers on your screen now. Profits are down. There's actually not profit, there's a loss because of the losses expanding in one of its subsidiaries. But not just that, even the top line has been pretty disappointing, you'd have to say. Those are the numbers. I think we'll have Sonal join in just the next couple of minutes to give us some more details. Gurmeet, Sonal, are you there? Can you hear me? No, Sonal, can you hear me?
Yes, Urvi. Yes, I'm there, and yes, I can hear you. And yes, it is a disappointing set of numbers that have come in. A loss this time around. It was absolutely not expected by any of the analysts that we polled this time around. So net loss this time has come at 189 crore rupees versus a profit of 813 crore rupees that we saw last year, same quarter. EBITDA margins at 15.5%, and that compares with a poll which was higher than this. We had a poll in terms of margins at 19%, so it's 400 basis points lower than what the CNBC-TV18 poll was suggesting as well. Now, we did see some profit warnings coming from FMC, Corteva yesterday. They spoke about big pressure coming in their Brazilian portfolio, and this is something that seems to have played out for UPL as well. If we look at the geographic decline, Latin America down 17%, there's Europe which is down 7%, North America is down 57% on a YoY basis for the company, India down 23%, rest of the world down 4%. So across all the geographies, the company has seen a major decline coming in. In fact, they do say that this time around it was impacted because of global channel destocking and elevated pricing pressure, something that across the chemical universe that we've been seeing as well. The finance costs have increased on a YoY basis from the average of around 650 crore rupees on a quarterly basis. It has gone to levels of 800 crore rupees in just this quarter. That is something that has impacted the bottom line for the company. And of course, this big loss that has come in one of their joint venture companies as well. The company says that adjusting for the high cost inventory impact, the margins would have been higher by 300 basis points in the first half. So the first half margins are around 16.6%. They say that around 300 basis points is impacted because of channel destocking. They say second half could be better. There is some recovery that they're expecting. But of course, this is a number that we did not expect. But the stock has recovered from the lows because of some positive guidance that they are giving. They are saying that most patent molecule prices seem to have bottomed in Q2 and are now stabilizing, and that's why they expect second half to be better. But of course, more numbers in terms of guidance and all will be required. For now, there's some recovery from the lows, and that's purely because they're talking about bottoming out of prices and also some recovery in the second half of this fiscal.
Okay, all right, Sonal, thanks very much. Actually, SRF also, the numbers